FuelCell Energy just reported earnings, and the stock moved. Revenue beat expectations, losses narrowed, and management made a big bet on AI data centers. Here's what actually mattered. FuelCell Energy just reported earnings, and the stock moved. Revenue beat expectations, losses narrowed, and management made a big bet on AI data centers. Here's what actually mattered. FuelCell Energy reported Q4 fiscal 2025 earnings, and the headline was revenue growth and improving efficiency. Revenue came in at $55 million, up about 12% year-over-year. Net losses narrowed significantly. Adjusted EBITDA improved, showing better cost control, and backlog climbed to nearly $1.2 billion. This wasn't a profitability story, but it was an execution story. The biggest driver wasn't the numbers, it was the strategy. CEO Jason Few said FuelCell is positioning itself to meet surging electricity demand from data centers, especially those tied to AI infrastructure. Management directly called out AI and data center power demand as a major growth opportunity. And that's what investors reacted to. The CFO also emphasized a strong cash position, saying the company now has the runway to pursue these opportunities without immediate funding pressure. This earnings report reframed FuelCell's narrative. Instead of being viewed only as a speculative clean energy name, the company is now tying its future to AI power infrastructure, where reliability and low-emissions energy matter. Key positives investors focused on: revenue beat expectations, losses narrowing quarter-over-quarter, strong liquidity, nearly $280 million in cash, and a growing project backlog. The market sees this as FuelCell potentially riding the AI energy demand wave. That said, FuelCell is still not profitable. Losses remain large on a full-year basis, and execution on data center contracts will be critical. This is a story stock, and sentiment can shift fast if growth slows. FuelCell's earnings weren't perfect, but they changed the conversation. Revenue is growing, losses are shrinking, and the company is now clearly aligned with one of the market's biggest themes: AI power demand. That's why the stock moved, and why investors are watching what comes next.